is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
What's going on, folks? This is Jacob Shoup filling in for Tom O'Brien. Let's take a look. Big news of the day is that PPI wasn't as bad as everyone anticipated. Wholesale inflation rose just 0.2% from March, which is below expectations. The Dow Jones economists had forecast the wholesale price would rise 0.3% and the PPI 0.6% in February and 0.4% in January. Everything was good, it looks like. This sent the market a little bit higher. Kind of easing fears of a longer-term horizon for the beginning of interest rate cuts from the Fed. Now, you had a few interesting things go on with it. Well, before we go into that, let's take a look. We had the ES Mini up about 0.89% right now. The Russell at 0.72. These, obviously with a lot of the tech companies, these are interest rate dependent. You have valuations from the discounted cash flow and kind of these more unique models that deal with the interest rates. Of course, a lot of people investing them in buying a lot of these novel products are affected by the high interest rates as well. But you can kind of see in the NQs and then also the QQQ that the tech is doing okay today. The Dow futures up 0.25%. Gold ripped on that, really from this news with the PPI. Kind of this idea that inflation is in fact slowing down. Silver up 1.4% today. Copper, sadly, still under that 4.3 mark for the futures, but silver trading at 28.44. Crude oil off slightly, still at 85.33 a barrel, still in that 85 area. Let's take a look too. Tesla up 1.76 today. Steel Dynamics staying pretty strong, right at that 145 level. We've been kind of seeing it do that this past week. Now the dollar still up. We're in the 105 region, up at 105.27. Of course, went over to the Qs. That's 1.7. Google 1.89. It seems they're going to be relatively, or analysts are suggesting they're going to be relatively competitive in the AI sphere, especially considering what Microsoft has going on. Meta trading up 0.54%, in Disney back up to 118. So, and then Apple, of course, at 3.7% today. It's a good move for a lot of the tech guys. So with what happened, okay, you had the PPI coming in cooler than anticipated. This was after the Wednesday report being of CPI being a lot higher, not a lot higher, but marginally higher than people anticipated. This PPI report kind of helped balance the market out, right? So it's this idea that when CPI came in hotter than anticipated, that the horizon for Fed rate decreases or cuts was going to be extended, right? And we've been talking about that on the show when I fill in. What's interesting is that you had two conflicting ideas, right? So I think a lot of people were anticipating this June cut to begin. You had Biden come out and say that he could see rates being cut sooner rather than later, or something akin to that, which I thought was strange because that has no bearing on what the government does. The Fed's its separate kind of entity, and then you had the IMF director come out and say that they'll probably start cutting rates in America at the end of the year, obviously way past June. So we're getting this kind of weird conflicting information. I think the market clearly wants lower rates because anytime they get a hint of anything relatively positive regarding inflation cooling, things rip off. Like we're seeing today. I mean, look at gold coming up 1.34%. That's a lot of action in a market that had been dead for some time. What is the true answer? I don't know. But what you can see is that some of these larger institutions are moving into Europe a little bit. And we'll talk a bit about that later when we get into the show. However, before we get too entrenched in the news of the day and kind of analyses, I want to take a look right here. This is tomorrow morning, all right, at 9 a.m. to noon Eastern time. This is going to be the inaugural stream of live Trading Fridays with Larry Pesavento. Okay, so how this works is it is a monthly subscription, okay, and every month on the second and fourth Friday of that month, we will have Larry trading live in the den in his own separate room. And that's from 9 a.m. to noon Eastern time. So that is every month, 2 times a month, and this is a monthly subscription. I believe we have Larry on with us now. Am I right about that?
You are sort of a psychic, Jacob.
Look
yes,
at that.
I'm here.
I can feel you back there, you know. How you doing, Larry?
I was just living a dream on the green side of the grass, as
right
always. I'm looking forward to tomorrow. We're going to have a lot of fun. We're having great volatility. These are the kind of markets that we love to see. So we should have a fun day. We had a pretty good 2 days in a row, but you just never know what's going to happen. Tomorrow's a Friday. It was a down week, and now we've had this giant move up, which was not unexpected because we had so many ABCDs on the bottom today in the Dow Jones, and then also yesterday in the NASDAQ, and today in the S&P. But we'll have some good moves. We had a monster move in gold today, and also silver, and crude oil surprised everybody to the downside, and we got a little bit of the short side of that. So we're looking forward. We got a lot of gifts for the folks. Stuff that they'll be able to use, and but it's going to be a recurring thing. We'll do it for a couple of months, see how it works out. But 3 hours on a Friday, I mean that's a breeze. I mean I do this 1 hour show every day, and that goes faster than a speeding bullet. So 3 hours is not going to be very difficult to get done, and we have plenty of trading opportunities. We had a beautiful buy signal in Apple today, and that had a monster move. But some days it's not like that. You just never know. But I hope everybody gives it a shot, and if it doesn't make any money, then you don't have to subscribe. It's that simple.
Well, Larry, I'll say I monitor a lot of the webinars you do. In the beginning of your webinars, you always open trade positions, right? We go through it. The way it works is you'll say something, we'll put that in the den so you can follow along. And honestly, I know we had, I think it was the last webinar, but we had some pretty happy attendance. So,
well, we've done 6, and all 6 of them have made money. A couple of them have done monsters, but the others, made the, subscription price was just only, couple $100. So that's pretty easy to do. But, I'm going to probably do somewhere between 3 and 5 trades. Then I answer questions, and I've got information to show people, things that they can study when they go home. They're going to get a free book, my artificial intelligence book that I wrote but never published. Well, it's published, but I didn't sell it. I'm going to be giving it away to the attendees. In fact, I'll get that book to you, Jacob, and you can make sure that everybody gets it. So I'm looking forward to having a nice crowd like we usually do. So it'll be fun. And hey, thanks for having me on here to give a little plug. I really appreciate it.
Absolutely, Larry. We'll see you tomorrow at 9 a.m. All right?
You got it, brother. Thank you very much, and we'll see you on the flip side tomorrow, folks. May God bless.
Sounds good. And remember, folks, when you're checking out, this is for this month only. You type in Larry Live at checkout, saves you $50 for as long as you subscribe. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. On the break, take a look at something that just popped about an hour ago. Morgan Stanley is being investigated. So, the U.S. Securities and Exchange Commission, the Office of Comptroller of the Currency, and other Treasury Department offices are involved. Shares of the bank fell 4.4%. I can show that to you once this graphics card speeds up, and I can get my charts up. But let's talk about this a little bit going forward here. Morgan Stanley's wealth management unit obviously caters to high net worth and small to medium-sized businesses. Some of their past clients are being probed as well, and these are international clients. It's pretty wild to see what will come out of that. See if there's anything else kind of important to go through. Not really. I'm going to pull up the stock there, just take a look at what it's doing currently. On the break, I saw it down maybe about 5%. It's going to work. You're going to find out. Anyways, let's move on while my charts load up. We can just talk about some news that doesn't, involve me looking up anything. But it seems like my computer's having issues in general. I'll talk about something. This is a little bit into crypto. Some crypto news that we have that I kind of want to bring to you guys every so often. It's about Pepe Coin. Pepe Coin is spiking up, and it's because they're going to start offering perps, which are perpetual futures. Very interesting. Stay around to learn what that is and how that works, because it's actually very fascinating, a little bit different than how TradFi operates. But right now, we have Tim Ord of the Ord Oracle on the line. Guys, I want you to check out ord-oracle.com. Tim is obviously a regular guest on Tom O'Brien's show. And let's be real, right? His analysis is so fascinating. He was calling bullish movements in the gold months and months and months before it happened. And obviously, his analysis of the general market as a whole has also been so valuable. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely, we're happy to have you. So, what are you making of what's going on right now? I'm curious to see what you got on your charts. Obviously, I know a lot of times you're looking at grand pictures as well, which tend to work out so much better. But this is, at least the PPI was interesting today, and I'm just curious to see what you got on the charts for us, because I got chart 1 up right now, looking at the GDX.
All right. Yeah, we've been looking at the big charts, like the monthly and weeklies and stuff, and I thought, all that's in an uptrend, so let's kind of look at the short-term trend, and that's what this is. So this is just a daily chart, kind of shows what the short-term trend's doing. And anyhow, The middle window is just the daily GDX. The bottom window is the daily GDX GLD ratio. And in a nutshell, when this ratio is above its mid-Bollinger Band, you got an uptrend, which you can see there is above the mid-Bollinger Band, you got an uptrend. So I like to at least use at least 2 indicators and not 3 to really help define what the trend is. So the next higher window is GDX advanced decline, and same thing. If it's above its mid-Bollinger Band, it's in an uptrend. And the top window, I got the GDX up-down volume on the daily. Same thing here. As long as that indicator is above the mid-Bollinger Band, you're in an uptrend. And so we've been in an uptrend since, basically March 1st. And the pattern that may be forming here on GDX, I'm not actually an Elliott wave expert, but sometimes you can actually kind of tell what's going to go on. So I'm thinking we're in a 5-wave up from the March low. And we're probably, a lot of times, leg 1 and leg 1 and leg 3 are about equal. Then that would imply leg 5 could be extended. But if you look at right now, if you look at leg 1 and leg 3, they're about equal. And we're probably entering wave 4 right now, which is kind of a sideways pattern. It may look similar to wave 2, kind of just sideways. I don't know how it's going to end up. But we may just stall here a little bit. But, judging by the daily indicators on this page, there's no indication of even a short-term high here, because all 3 indicators are not even near the mid-Bollinger Band. So I'm thinking we're going to move sideways here for maybe a week or so, then head up on higher. This is all on a short-term basis, so I don't see any short-term top in GDX thus far. So let's go to chart 2 and actually look at the weekly.
All right, we're about to have a chart up. Give me a second. Okay, perfect. We have chart 2 up right now. Yep.
Yeah, okay, chart 2, the bottom window is the weekly advanced decline, and the second window up is the up-down volume weekly decline. And this is it whips around a little bit. All those dotted lines across the red or the white or the blue lines are when both indicators close above the mid-Bollinger Band. The red lines, dotted lines, are when they close below the mid-Bollinger Band. So you can kind of get some whipsaws back and forth as this indicator kind of whips up and whips back down. But right now, it's on the weekly time frame. It's probably still early in the time frame, but it gave way after the bottom. It just gave a buy signal here, probably looks like about 2-3 weeks ago. And so on the weekly time frames, you're on a buy signal here. We're starting to break above some previous trend lines. I don't have it drawn on this chart, but I think there's a head and shoulders bottom that formed where the October of 2022 was ahead, and we're breaking the neckline right now. So even though there might be a mild consolidation here, it's not the final rally going up. But the weeklies are on a bullish configuration here. Not really seeing it turning down. We're kind of hesitating here, but short term, looks pretty good. So let's flip to chart 3.
All right.
Okay, same indicators again,
right,
but this is on the monthly time frame. And this is the one that you want to see cross the mid-Bollinger Band. And it's always, these signals are always going to be late. They're probably late to the party, maybe a month, maybe 2 at most. But they catch the main trend of the market. And they get on a signal, and these signals last sometimes years. They gave a sell signal back in 2012 and remained on that sell signal all the way into 2016. So that was like a 4-year sell signal. And it topped the bottom and it rallied up, and it was on a buy signal, almost 2 years. Then kind of a sell signal and a buy signal from the, looks like about 2019, mid-2019, gave a sell signal in 2021. And actually at the moment, is still on a sell signal as this indicator has not closed above the mid-Bollinger Band. The bottom window which is the monthly cumulative advanced decline, is right smack at the mid Bollinger Band. And the top window, which is the up-down volume, is still a little short. So, and the middle window is the monthly GDX, and I got that trend line drawn to show the head and shoulders bottom. And as we're talking right now, we're passing through that neckline right now. So it could hesitate maybe a week or so here, but normally when you go through them a length of time.
Right.
I hear the music.
And I have a question for you when we get back on Chart 3. Folks, stay right there. We'll be right back with Tim Ord of the Ord Oracle.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, we have some exciting news. Live Trading Fridays are here. Join Larry Pesavento every second and fourth Friday of the month, 9 a.m. to noon Eastern Time, as he places short-term trades and gives insights into his strategies. That's right, that means the first Live Trading Fridays event starts this Friday, April 12th. Make sure to sign up so you don't miss the potential for huge gains. If you've attended Larry's stellar webinars before, you'll be familiar with the live trading portion. Live Trading Fridays will be strictly this portion. That's 3 hours of pure trading. All trade positions will be communicated clearly, and all questions will be answered in a timely fashion during these live events. When signing up, make sure to save $50 by using code LARRYLIVE at checkout. This code is valid only for this month, and the discount stays with you for as long as you're a subscriber to the service, so don't delay. Sign up, sit back, and follow Larry Pesavento as he places trades live. See you there, Tigers.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shute filling in for Tom O'Brien. We are with Tim Ord of the Ord Oracle. Tim, before we went to break, we were looking at Chart 3. And You were saying,
right.
I just want to make sure that I'm right on this. When it's under the mid-Bollinger Band, this still indicates on this is a short-term chart, but it still indicates that we're in a sell kind of position, right?
On the monthly time frame?
On the monthly time frame. That's what you were saying, right? How long?
Go ahead.
How long do these indicators need to be above the mid-Bollinger Band for it to be a true kind of shift into a buy market?
Well, just 1 month. As soon as it closes on the month end, since this is a monthly chart. So if the month of April closes above the mid-Bollinger Band, to me that's a buy signal there.
Okay.
And so it's not like 2-3 months or anything. As soon as it closes above the mid-Bollinger Band on the monthly close, not it's since it's a monthly, you have to wait till the month closes. But once that happens, it's on a buy signal. So, but anyhow, this signal on the monthly time frame doesn't whip around like the weeklies and dailies.
Okay.
Usually, when it gets a sell signal or a buy signal, it stays on that path for a very long, for at least a year and a half, if not longer. So, if the current rally continues, most likely it will, because I'm thinking this rally is going to last probably into September or October of this year. But I think it even just lasts into May, both those indicators, the bottom one and the top one on this chart, will close above the mid-Bollinger Band. And that opens the door. We're looking for most likely a multi-year rally, probably something similar like a 2000 low of when the major bull market began back in 2000. So I'm thinking some big things are about to happen in the gold market, especially the gold stocks, along with gold.
Right.
So,
and if I can, I actually have a question for you in the den. This is actually just about a technical thing. We have one of the den members asking you what your Bollinger Band setting is. Is it 1 or 2 standard deviations?
It's 2 standard deviations.
Okay.
It's whatever it's. I don't make any changes on the Bollinger Bands for these indicators. So it's just 2 standard deviations for the upper and lower Bollinger Band. So
awesome deal.
I just take it. Yeah, I just take it right off the standard model.
Okay. So, awesome. Thank you. Yeah.
All right, but we can move on.
Absolutely. And I also want to say too, we have some den members. We had some silver and gold to go, but they're also really looking forward to what you got on SPY as well.
SPY, all right. Well, we can skip right to it, SPY, if you want to see what's going on there.
Let's check it out. I'm going to pull it up right now. I think that's chart 7, right?
Yeah, let's see.
Perfect. Yep, I got it. It's chart 7 right now.
Hang on here.
No problem.
This is a little bit tricky here. But anyhow, I'm still, I haven't. If we were down today, I most likely I would have got a signal. The reason why I'm saying that, let's go to the chart. The top chart is the SPY, and I got a shaded pink area across the middle there. And the only reason I shaded that pink because that's where all the trend readings got a high level. I labeled them back in early or mid-March. I had a 1.21 trend. I had a 1.15 trend, and in late March, I had a 1.65 trend. Last week, we had a 1.8 trend. If you notice, those trend readings all come in a kind of a congested area. So once you start getting panic, and a trend, what I call panics, that's when the trend reading closes above 1.2. Once that starts happening in an area, it continues to happen. If you look at the trend reading earlier today, as the market was down, testing yesterday's low, that trend reading was up around 1.7, 1.8, up in that vicinity. And if it could have stayed down today, the market could have stayed down today, I probably would have got a buy signal, but it kind of bounced up. Now we got a trend reading of, we're talking here, 0.95, not real bearish. So I'm still thinking we're in the vicinity of a low, and I was hoping that we'd get another trend reading, I thought we might get down to 107 on the SPYs, which is kind of bottom of the trading range, and most likely that trend would have been pretty high there. Give me a confidence that the 5-day, at least a 5-day trend would probably get up to 1.2, probably not the 10-day, but that would be enough reason to get long around that 107 to maybe 110 area. But since the market rallied today, if you notice volume on, at least on the SPY, is not going to be higher, most likely. The market, the day's not over yet, but looking at it, we're probably not going to have the volume we had yesterday. So we broke yesterday's high on lighter volume, so it kind of implies that we may go back down and test today's low again, if not break it a little bit. And if we do, and we get a closing reading around 1.2 or higher, I probably will be going long. If you look at the second window up from the bottom, I do quite a bit of work with the VIX. And also, if you do the Bollinger Bands on the VIX, it works pretty well. I got some red circles on the VIX, and today, we were above the upper Bollinger Band, and that was kind of a pretty good signal. You get a close above the mid-Bollinger Band on the VIX, and you get a trend reading above 1.2 as the market is pushing down. That combination is a pretty good combination. So you got two indicators that are telling you probably are making a bottom. And also, if you notice, I also have a Bollinger Band on the SPY, and that Bollinger Band was not too far from today's low. So we had all that combination would have led a decent setup for a buy signal. But since the market kind of rallied here, I don't have if we came off the bottom with the sign of strength, which we're not having, I would have maybe tried to run after it. But since there's no volume here and the trend's not showing any great panic, I'm hoping that we get one more pullback to test the lower Bollinger Band on the SPYs and touch the higher Bollinger Bands on the VIX, and hopefully get a close around 1.2. That combination would be a pretty powerful combination that you at least get a bounce that would last a week or two and maybe longer. But since it bounced today, maybe tomorrow we come back. I don't know. But it's kind of a sloppy market. I've been out of the market for a couple of weeks here, and I get close to signals, and I don't quite get the trigger that I want to get. So,
right, it's weird. Exactly as you're saying. We had a little bounce, not in a lot of action at all. I hear what you're saying. Tim, we are about to go to the break. I know you have something on silver, though. I really do want to hear that as well, if you're willing to stay with us just for a little bit into the next segment.
All right, sure will.
Fantastic. Folks, we're with Tim Order, the Order Oracle right now. When we get back, we're going to look at one of his silver gold charts. Really looking into that, especially for your silver bugs. Folks, stay tuned. We will be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. We're with Tim Ord of the Ord Oracle. We're moving back to chart 4 quickly because it's looking at silver, and I'm curious to see what's going on with that because we've had a nice rally in silver as well.
Oh, actually, the middle window is the monthly silver-gold ratio. Mm-hmm. And how I use this ratio is, the bottom window is a percent Bollinger Band. In other words, if it touches the lower Bollinger Band, it gets below 0. That's usually a kind of an oversold market. And the next higher window is a rate of change, just a normal, the 12 period. And the next indicator above that is the RSI 14, just the 14. So how I use this indicator, the monthly silver gold ratio, if 2 of those 3 indicators get into the buy levels, then the market's making a short-term low as far as the XAU is concerned. That's how I use it. So it's not really it's a timing market for the XAU. And I put, this chart goes way back to 1984. So the signals are pretty rare, but when they happen, they're accurate. And anyhow, the blue lines across the chart show the signals when they were last. The last one was generated was August 2022, and that was a low. And actually, Tom and I were talking, I think, back in maybe July or August of this year, because once these signals are generated for the XAU, I have the percentage. If you look at the top window there, I have the percentage moves when those signals are triggered. And most of them are around 100%, give or take. Some are more, but at least 100%. So I was concluding the one in last year of August, the October low, rather, or 2022 low, had a projection up to around 180. Well, the market did start to go up, but we got in a bunch of chop most of 2023, and finally we're breaking out. But anyhow, this was a long-term chart. It gave kind of a long-term buy signal, and so we're thinking we're probably going to go up to at least 180 at a minimum on the XAU, which, in my opinion, I think we'll actually do more than that. I think this is setting up to be more of a 2,000 low type thing where the market may rally for a number of years. But anyhow, that's it's not really predicts what silver is going to do. I use the silver gold ratio to predict what XAU is going to do.
I see.
So but I'm bullish on silver too. Matter of fact, in bull markets, silver should outperform gold, and gold stocks should outperform gold. So, in an essence, in real strong bull markets, silver stocks should outperform the gold, the silver, and the gold stocks. So
right on.
So anyhow, that's because silver should do from really well here going forward. Silver stocks and actually silver. So I don't know. We can go on to chart 5 if you want.
Absolutely. Let me pull it up right now.
Okay, again, on chart 4, that gave a buy signal in August 2022. In my opinion, we're still on that buy signal. So if you go to chart 5, we got another signal of our August 2022 using a different method, which is the slow stochastics on the XAU gold ratio. So we got 2 different indicators. They're actually, I got another indicator too. It's not shown on this presentation, but I got actually 3 different indicators on the monthly time frames that all show that August 2022 was an important low. So I think that was the bottom, period. And we started an uptrend since then, even though the market really hasn't done much. It's I think, momentum-wise of things to come is just starting. If you look at the bottom window, which is the monthly slow stochastics for the XEU gold ratio, you really don't get a top in the market until you get that indicator up around plus 90. And if you go look back to history, this chart goes back to, looks like about 1986. They all picked out those highs all pretty well going backwards. So how long it's going to take to get up to the 90 period, you know, we came off the low in August 2022. We kind of bumped up, came back down. You know, there's other indicators that this rally may last into 2027 by cycle analysis. So I think we're still early in this bull market. I think it's got years in front of us by a few different methods, and so how high is going to go, I really don't know. But probably you'll have to worry when this slow stochastic gets up to plus 90, be the time to, you know, pull your bull horns back in. And I don't know how high that will be on the XEU gold rate, or the XEU gold ratio. Will we go back all the way up to, 0.375 on this chart? I don't know. But we know if you look at the XEU gold ratio, which measures the valuation, I guess you might say, gold stocks to gold stocks are extremely cheap compared to gold. Right. That ratio is in the past from 1980 to basically 1990, about 1990, or actually 2000, bounced around between about 0.15 to 0.375, and we're down in the 0.059 range, extremely cheap. So I don't know what's going to go on here, but I think this is once in a decade that you get this setup. The last time we had this type of setup was in 2000, and that was we had a lot of stocks that started off to be penny stocks that went into $10, $15, $20. I'm thinking this may be setting up for something like that. And right now, there's really nothing really, according to media anyhow, that are really, sentiment-wise, I'll put it that way. Sentiment-wise, we're not showing a great deal of enthusiasm with the gold stocks. Nobody really cares. Right. And that's usually a good sign, because that usually comes at the very end of the move. So I still think we're in very early stages of a equity silver gold market rally. That's how I'm putting it.
Yeah. So, we'd love that if that happened, huh? Well,
yeah, Tim, I've been long this market for time, and really it gave me quite a bit of education, what to do and what not to do. So, but I've been through this cycle. I've been trading the gold issues all the way back to 1980, or actually about 1978. I started to even trade commodities in it, and so I've seen the cycles as they go forward. And usually there's about a 20-year cycle. And if you look, the last cycle started in 2000, so now we're in 2024. Probably the bull market really started in 2022. Right. So we're probably in a 20-year cycle here. So it'll be interesting going forward.
What you said, too, especially being like a younger guy and really, I didn't start trading until I was like 22 or something like that. It's only about 5 years. But, listening to you and Tom, like, you guys have been through these kind of market moves before. And I don't know, for me, I think, and for other young guys as well, this is super cool stuff. Tim, we need to get to like another webinar or something going. Thank you so much for coming on the show today, Tim. Seriously. Yeah. Awesome. Guys, that was Tim Ord of the OrdOracle.com. go give them a check out. That's ord-oracle.com, and we will be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We only have a short segment right now. I love those lower thirds. We only have a short segment right now. I wanted to talk about, I mentioned it before we had Tim Ord on. I'm trying to bring in a little bit more crypto. We've had some clients come and email us and want us to look at some stuff. One of the things that I found interesting today is, one of the things I find interesting in general, really about, decentralized finance, is these kind of novel ways they change some of the operations from TradFi, right? So, when you're taking out futures or whatever, right, on any kind of equity, the prices converge essentially, right? So when you have your expiration date, right, the value of that contract is going to shore up somewhere close to the actual underlying asset. You either lose money or you're able to make some money depending on which position you chose. In DeFi, you have something called perps, right? And so these are perpetual futures that don't really have a timeline. So the question is, how do these kind of shore up? How do the prices converge of it? And there's something called the funding rate. You guys should look a little bit more into this since I don't have too much time to discuss it. But essentially, say you have a lot of people on the short side, that premium for purchasing the short becomes higher and higher and higher and higher and higher and higher over what it would ever be in something like like TradFi. Anyways, Pepe, which is I think like the 3rd largest meme coin or something like that, has just now introduced perps for its coin. This sent obviously the coin itself skyrocketing. Regardless, I think it's super interesting and definitely worth a little bit more investigation going forward. Take a look at just some random news again, since we only have a short time here. Microsoft is unveiling new Windows and cloud AI features in May, so we're finally going to get some integration with ChatGPT into general Windows and stuff like that, which I think is fantastic. And the guy from DJT, the director, is being accused of hacking files in an attempted corporate coup. Man, it's just like the gift that keeps giving. These are wild articles. Folks, thank you so much for joining me today. We're going to have Basil fill in at 9 tomorrow. Keep in mind, we have Larry's live trading happening tomorrow at 9 a.m. Friday. You've got to check it out. Email me if you have any questions. Have a great rest of your day.